Hey guys, it's Will here. I'm going to talk about the sectors, the indices on the stock market, and then get into some sectors mostly. Maybe a bit of crypto. So I've got TC2000 here, and you can see that I'm looking at pre-market data here. So that's the nice thing about this program. So what I've got here is a tab on the markets. So that's the Russell 2000, the NASDAQ, the S&P 500, TSX in Canada, the Dow Jones, the US dollar Canadian exchange, and then the VIX, which is the volatility index. And so these values are actually for this morning, Tuesday morning, May 11th. And so we can see already that the IWM, the Russell, is down 1.63. And the NASDAQ's down 1.5%. So everything's basically down, except obviously the VIX is the volatility index, which is up. You can actually trade this VIX. Why? So it's a way to, this thing will go up and down a lot more than the market. So anyway, I'll talk about that in a second. So the Russell kind of went up really nicely here and then kind of went flat. And a couple things to note. Right now we're below the 50-day moving average. So that's this blue line here, the darker blue line. So down here I have the price percent oscillator, which is like the MACD. It's a momentum. So you can see that you have this decline every time the momentum is going down. It doesn't reach a new peak here. And the other thing I have on this chart is the relative strength compared to the S&P 500. And so you can see that we're in a decline as well. We broke below the 50-day. This is the 50-day moving average of the relative strength. So we're in this nice uptrend here, relatively speaking, to the S&P, and now we're in this decline. So if you were purely trading, if you wanted to find and focus on the best indices here, once you started to see this decline, you'd probably move your funds to something else. That's the nice thing with these ratio charts. I've done a few videos on that that you can check out. If you want to get TC2000, I've got a link below. You can get a free trial or $25 off if you decide to purchase. I've got the gold plan. I'm using US real-time data as well. And this will give you the gold plan and above, I think, gives you the pre-market, which is nice. Because you could actually trade if you wanted to on your whatever your trading platform is. You can usually trade before the market opens as well. So let's go through the other ones. NASDAQ is now below the 50-day moving average as well. So you can see here the price percent oscillator, the MACD momentum crossed down April 26th. So it's, it doesn't always work. You get these over here, you'll get these crosses, but it's still going up. So it's not, something you just totally trade on based on that. So I look for multiple confirmations. So I'm still above the 21 EMA here. This is where we broke down below the 21 and the 50-day moving average. So also you can see here, there was an increase. The NASDAQ was picking up, and there was even though we are below the moving averages of the relative strength, the 50-day. So, you can trade earlier, if you start to see an uptrend in the relative strength like this, but you are below the 50. So once you get above the 50, you might feel better, but, because you're seeing this increase. But now you see a complete breakdown here. And this is relative to the S&P 500. So then we go to the S&P 500. We did have a break of the momentum here. Small little candles, dojis. And, it's in better shape in that sense. But now we're getting close to breaking the 21. We have this kind of a bearish engulfing big down candle here. So things aren't looking great, but those ones are in better shape. And the Dow was in probably the best shape, but now we have a bit of a decline here. So what happens with this candle is you start at the top of the dark black candle. It goes up and then it comes down and ends up down. So, depending on the severity, you get a shooting star. Like if the wick is long, like over here, see how we had this similar candle, and that indicated a downtrend here. Not for like a long time, but so that's in a better shape. Like you can see here that the relative strength was increasing quite nicely. It's above the 50. So this was in the best shape of all the the major indices. So I look at the US dollar. There's another one. This is the exchange with Canada, but we're in this. This just shows that the US dollar has been declining quite a bit, and that has implications for the markets, for gold, stuff like that. The VIX is something that I'll put I'll put a low point here, a support, I guess you could say. But like a lot of times you barely get above the 50, like you're in this big decline. So for this to be really reversed would take quite a bit. Like you see here, this was the crash. It's below the 50 in the 200-day. It finally breaks up above the 200. Took a while by the time the 50 gets above, you've basically, so that was a very quick transition. So you can see for the most part, it's been in a massive decline. You have to go back quite a ways, 2016, where you see these big spikes, and there's huge increases in the VIX there. All right, so from there, so I've got a tab, like I said, with the various indices. I like to take a quick look at this. From there, I have a sector ETF tab. So I've added various sector ETFs that I'm interested in. So that could be like certain commodities, gold. It could be various tech ETFs, online shopping, healthcare, all the different sectors. And then I've got like scans on that. So right now, silver, this is a miner. It's junior miner. It's probably the riskiest in terms of the silver. There's a SIL, which is just the bigger miners. But we're in this flat period. So even though it's nice to see a rise here, the ultimate will be a breakout above, this point, which is in the $18 range. But, this, I just have it sorted by the percent change. Certain things like soybeans are looking good. They're in an uptrend here. But, at certain points, they get pretty high. So like you see this pullback, when you start to see that after a pullback and this candle starting to go up, that could be a buy point. And then we have this pullback here. So it's kind of high up above the moving averages, but we're in a nice uptrend. You see the MACD going up and the relative strength. So these types of commodities are doing really well. We have corn, same sort of thing. So every once in a while, like you get really high and you want to maybe wait for a pullback, but they are looking really good and they're in this uptrend here. What else? Silver is just the bullion itself, and that's looking good. It's in a nice uptrend. Of course, we have some resistance, from the highs, but like this one here is around 10.26. Ideally, you want to see, but we're in a nice uptrend momentum-wise, and this is moving up nicely. Gold is probably in a similar situation, but you see here how it's bouncing off the 200-day moving average, and it does have obviously some resistance, but it's been in a nice uptrend. So you can see here what the momentum is going up, but it's got a ways, it's got some work to do, but definitely moving in the right direction. So I want to see it clear this 200. If you don't have gold, let's say, and you're seeing this, and you're right there, I wouldn't be buying because, there's a good chance it's going to bounce off the 200 for a period of time. Let's see. One thing I do with a scan for relative strength is to try to find the best sector. So if I click on that, what I've got is the relative strength. The 21's above the 50. This is just the price history. And then you've got the relative strength is above the 50-day moving average. And the 50 is above the 200. So that's going to remove a lot of stuff. And you can adjust that because you might want to see it like coming up, but not necessarily above the, the 200 or whatever. So you might want to just see that there's a increasing relative strength. But this is a quick way, like you see copper moving up the relative strength. Here, the momentum moving up. So everything's looking good. The only thing, like, I get concerned when it's way up off of 21 like this, you see the pullbacks. So that's what, if you're right at this point, I wouldn't be buying just because where it is. And you see this reversal candle here and a doji. So, I'd be waiting for that one. Emerging markets could do well with the lowering of the dollar, the US dollar, but it hasn't really done great recently. But I'm keeping an eye on some of the emerging market sectors. That could be Europe, China, Mexico, Latin America, stuff like that. There's a platinum fund and palladium, which is similar, all the metals and stuff. There's a kind of a low spot. That would be a good point. If you had to stop, you wouldn't want it to drop below that. A bit of a turn down there, but we'll see what happens. But relative strength doing well compared to the S&P. Uranium, similar situation. Good charts in terms of the momentum, but it does get a bit ahead of itself. So ideally you want to be buying at these points. Once you start to see the reverse here, those are good spots. Right at the 50, kind of a support point right there would be a good spot. So I put an arrow sometimes when you see some strength above the 21, the 50, very close, have a good stop location. But once you get up here, the risk is quite a bit higher. So you'd have to put your stop at whatever percent you're willing to lose. You don't want to put it too close, but the chance of a pullback is a lot higher. So let's see. Obviously, if we look at financial, it's doing pretty well. Similar situation. There's this pullback right now. So we want to wait and see what happens, but good relative strength. All the tech is pretty much doing really badly. Like you're now below the 200. Your alternative energy, your ARC now is below. So when you see it bounce off the 50, bounce off the 50 again. So sometimes people get excited when they see this reverse here, but once you're down 50-day moving average, sloping down. You keep hitting that resistance. And you don't want to be buying this at all. Some people bottom feed, they try to buy the bottoms, but you can see here, like with the relative strength too, going down, this is not good. You've got your solar energy, similar. So all this tech stuff. What else? Cannabis. It's not doing great. People thought with the Democrats getting in the States, like the US, but we're still in a downtrend here, below the 50. So it's not time to get into all that. So you've got your buying, your online buying, your things like reopens are kind of weak too. The betting, gambling stuff. So yeah, so basically commodities, silver, gold, you see here, soybeans, all the commodities, silver is doing the best. And if things really crash, then everything would probably go down, like including gold and silver, just like in March last year. But I have a lot of sector ETFs, and when you see it mostly red in the morning and not much doing well, it's not a good sign. Coffee, that's a commodity as well. It's in a nice uptrend. But we'll have to see what happens if the markets tank. So then one last thing would be just to look at Bitcoin, this is the Grayscale Trust. To me, it's not looking very good. We have lower highs here, but also a bit of a, we're below the 50. It's not getting back up above the 50. So it's kind of weak. It could turn over, but we'll see. There was a lot of support once it got down, in terms of Bitcoin in the $45,000-$50,000 range. So we'll see if that happens again. The other one, the big one, is Ethereum. And that's been incredible. So one of the, I'll just say that when you're getting up like this, it's unbelievable. What'll happen is you'll get this pullback down to the 50 or 21 before it keeps going. This one pulled back a bit here to the 21. So if you're up in this range and you want to get in, you'd probably want to wait for a pullback, even though it's hard to resist, these big moves. But relative strength, this is doing really good, and the momentum and everything. Okay, so yeah, if you want to get TC2000, check out the link in the description below. And good luck with your trading. See you guys.